It, well, except that the audio, we've only got music playing. Oh,
Rich has got his test music going.
yeah, there we go.
Now we're live. Now we're good.
We're live.
Good deal. Good deal. Well, we've got a few people in here. I guess the purpose of this is just to, first of all, I'll just introduce myself. My name's Owen. Pat and I own Mission Winners, and we want to be able to make ourselves available as much as possible to answer questions. And I recognize this morning that in the live feed that Pat did, there were a lot of questions, and I'm pretty sure we didn't get to them all because we only had about an hour to do it. So I thought I'd just make uh, take some time here and answer questions. You guys want to know stuff about the website? We can go through some charts. Tesla is pulling back here just a little bit. You might notice that. Um, so we can go through some charts if you want, or just answer some questions about the service. Whatever you guys want to talk about, I've got about a half an hour to do that. Jack wants to know what the background music was. So my background is I was in business. Started my first business at the age of 22. Started to dollar cost average into the market in 1987. Come 2000, I decided that things were getting a little bit toppy, and I called Vanguard and I talked to my rep there, and I said I want to go to cash, and he says, "Oh, you don't want to do that." And I says, "Oh, the market's really toppy." I says, "Really? I think that things are, getting to the point to where they're." I didn't even know what the term overbought meant back then, but I said, I think, and he talked me out of it. And I had a couple of sleepless nights, and I called him back and I said, I don't want to know your opinion. I don't want you to tell me what to do. I want to go to cash. And of course, the bubble ensued and burst. And fortunately, I was in cash through all that. And along about 2002, I decided that I needed to take better control, more control of my investments. I had retired, semi retired in 2001. I had sold out a business, sold out some real estate. We left Chicago, moved here to the St. Louis area. And I decided that it was something that I always had an interest in. My dad was always in the market. He retired at the age of 50. And I just wanted to be able to manage my own money. So in 2002, I started traveling back and forth from St. Louis to Chicago because, of course, everything I knew was in Chicago. And I used to hang out with the boys down at Thinkorswim. That was back in the Thinkorswim heydays when it was just, everything was just really moving and shaking with those guys. They had just come off the floor. They were a bunch of floor traders, Scott Sheridan, Tom Sosnoff, and those guys. And I spent a lot of time learning about the markets and learning about options, and spent several years there. Bought a ton of information, spent a lot of money on education, and started trading my own stuff long around 2004, 2005. Got back into the market in 2003, but then started actively trading more in the a couple of years after that, after I thought I learned some stuff. And of course, had ups and downs. Met Pat Walker in 2006, and that relationship has really propelled my trading ability. I mean, he has taken my trading and my investing to a whole new level, and I guess that's kind of where we're at today. Um, Pat, I'll go back and I'll tell you this. Mission Winners was founded in 2017. Pat called me up in the early part of 17, and he says, "Hey, I hear that maybe you can put together some stuff that allows me to broadcast what I know to the world." And I said, "Well, I might be able to pull that off." And so Rich, I got a hold of Rich and said, "We've been working on various things over the years." I said, "What do you think? We can take this and run with it." And so it took us about 6 or 8 months to kind of get all the pieces put together. And then we launched Mission Winners around Labor Day in 2017. So it's been a good ride, good run, and it's very enjoyable to work with folks. Very enjoyable to. Would love to get the cards and letters in the especially over this recent holiday, people sending us notes and saying how they've done and how things have changed and turned around for them, and how well they're doing, and it's just good stuff. Love to help. So let's see, what do we have for questions? Can we review the XLE and XLF charts yesterday and today? Seems like they are doing well today. Yeah, financials definitely popped, and it was a result of the interest rates. If you track interest rates like in the TNX, we pop. Let me get off this 15-minute chart and get to a daily. I was kind of keeping an eye on Tesla there and seeing what it was going to do. But, the TNX, which is, the 10-year treasury, has popped. And if you remember last time that it got up here around 1.7, $1.70 or 1.7%, when it got up here these last times, we had pullbacks in tech. Because essentially what's happening is when the market is charging more for money, it costs more for companies to operate because it costs them more to borrow that money. So if we're looking at the financials, XLF for example, we're going to see a pop based on what's happening there. It's not entirely, but that's certainly a part of it. Now, if you're asking me, it seems like they're doing well today. I mean, they are. We missed our entry. No question about that. I know that XLF is something that I'll trade back and forth, and I've kind of kept an eye on it, and certainly missed this yesterday. Again, waiting for the market to kind of find its footing and decide what it's going to do. But you can see here, this is my paper trade account, and this is I have one share in here. What I'll do is I will put shares in different products, and just to kind of track them for me. It helps me keep a little bit better eye on things. And it would have been an entry yesterday. We had a little bit of pickup in volume. It picked up above the 50, and it closed in the upper third of its range on a pickup in volume. So sure, that would have been an entry, but I wouldn't chase it here today. And you want to look at energy as well. Energy has certainly caught a bid in the last few days. Yep. I guess what do you want to know with it? Other than they're doing well today, they are. No question about it. I mean, definitely had a pickup in volume yesterday. The energy popped back up above the 50 and had a very nice close. Very good. All right, so I heard mostly options. I do a lot of options, but I also do a lot of stocks. So I trade options very conservatively. If you saw my options trade of yesterday, my Tesla trade, you'll notice that everything I do is limited risk. And it's not that I won't buy straight calls. I will, but I like the market to be trending. I don't like it to be whippy and choppy and questionable. I like to be in a clear upward trend. One of the things that I'll trade options on is, of course, my favorite stock. If you see the, excuse me a second. Hope coffee wets the whistle there. So if you watch any of my videos, which are there's a few of them out there, but Apple is one of my longer term holds, and I will trade options on this when it trends. When I hit a moving average convergence like this and it's popping above the 8 and we start to go into a trend, I'll look for those kinds of things in stocks that I like. I won't do this just across the board, but I will do it in stocks that I'm holding and stocks that that I'm comfortable with, that I'm familiar with. You see that a lot of times a trader will do what he does because that's kind of what he's always done. Well, you get onto these things, you get onto these various products and start to trade them and invest in them and build positions in them. And over time, you kind of get to understand their personalities. You know that when they pull up above the 8, they're going to snap back to the 8. Maybe they'll go down to the 20 when they do something else. So it's just kind of but I do, David. I do trade options, and I do post from time to time, and I like to do more of it. Really, the reason I don't is because there aren't a lot of people that ask me a lot of questions about it. So my video that went out yesterday, I didn't get any real feedback on it. So, well, maybe people just aren't interested. So, but that's kind of the driving force there. If you want to know, about it, just ask me questions, and I'm happy to yammer on about options. Ken from Oh yeah, from Hun Wallet. Yeah, I hope I didn't booger that name too badly there. I know who you are. Just joined and trying to understand the lay of the land. Set up on Discord and Twitter. Is one better than the other for updates? I love tweeting, and I set it up. There's a video on it. If you go into our video library there and search for the word tweeting, and you'll find two videos. One is the setup, and then one is kind of an expansion of it, and it will help you get the initials columns set up. There's a gentleman, young man over in UK that built that application, and he did a phenomenal job. Nice kid. I believe he's a senior or a super senior right now in college. And he's made some custom changes to it to tweeting for us, and it works great. I love it, and it's really great. I'm not a big chat guy. I don't, it all depends. See, we have people who are really interested in chat, so they love Discord. And I kind of pushed back and kicked and screamed a little bit before we went into Discord and set up the chat room. But now that it's up, I think Rich, and Paul each were proponents of getting it set up, and I think people love it. It's just not just doesn't fit my particular personality. It's not right or wrong. I just don't track well with stuff flying by like that. So just my own mental limitation, I'm sure. But I love tweeting, and I love to set it up that way. Let's see. Ken Min. All the tweets from Twitter end up in Discord. Yes, they do. If you want to ask questions in Twitter, Twitter is a better choice. Oh, that's Paul. You're answering that. Hey, I'm keeping up. You guys want to jump in here and tell me what I'm missing or what I should be looking at? Just let me know.
Oh, I think you're doing pretty good.
Okay, Joda, when do you execute a breakout? Do you wait till the end of the day or the minute it breaks out? Well, ideally, you take it when it breaks out. And I'll tell you what I do. What I really like doing is I like going through the key list the night before or the morning of in some cases, and I'll go through those charts and I'll pick the ones that I like, and I'll pick 1, 2, or 3 stocks, typically no more than 3, and I'll pick out a base that I like. Like for instance, Apple here at this point. If I was looking at this last night, I would look at a buy over the tops of this. It's probably on our key list today. In fact, I know it was yesterday. But I'll set a buy stop on it, and I'll just let that go ahead and trigger. One of the real cool things about what we can do today that we couldn't really do 15 to 20 years ago is we can put buy stops on things and let them fill, and then in 10 or 15 or 30 minutes or whatever, maybe you can send a notification to your phone or just check your computer every once in a while. You can look at your trade and see, do I want to stay in the trade? Do I want to exit part of it? Do I want to exit completely? What do I want to do? And commissions are not an issue. I know back when I was dollar cost averaging into the market, I would actually drive to the Schwab office and give them a check every once in a while. And they would charge me, I think it was $99 to make a deposit. On top of the load. And today trades are almost completely free. So for that reason, I say it's really easy just to put a buy stop on something. And if it doesn't work out, you can't put a buy stop on something and go on vacation for 2 weeks, but you can put a buy stop on something and check it shortly after it fires and decide whether or not the volume came in. Take it down to a lower time frame and see. Does it make sense to stay in the trade when it broke out? On a breakout like this, you would see this volume. Would this be something I would have stayed in? Absolutely. Yeah. I mean, today, of course, it's, not doing exactly what I would have wanted it to do. But, on a trade like this, if I would have gotten in over these tops, this is a 30-minute chart, and I see that volume, I'd have been very comfortable holding that all the way into the close.
You've actually made a very good video on this, Owen. I'm not sure where it's gotten. I said you made a very good video on this. I'm not sure where it's gotten off to, but you also talk about setting optional sell stops as well in that video, just to protect things.
Yeah, I will. I'll set a first triggers OCO. So what that is if you're not familiar, just you set up a trade where I just clicked on the ask, so I set up a buy, and then I'll come down here. This is on the TOS platform. So if you trade on TOS, looks a lot like this. And you just go here to first triggers OCO, right click and do create an opposite order, right click, create an opposite order. And now what I've got is I've got a buy order in, and I'll change this from a limit to a stop. And I can increase this. Let's say I want to get in this at 182, for example. And then if it fills, or when it fills, if or when it fills, I guess, it's going to, that buy order will fill, and then it will trigger this one cancels other. So I can set this to, for instance, I can say, I want to sell some of my position when it hits 188. I'm just picking numbers here. And I can set that for a limit. And then I can say, but if it breaks down and it goes to 178, I want it to stop out. Okay. And I can even change this. I could change that sell order to only sell half of my position when it hits that 188, and then I'd hold the rest of the position when it, for additional gains. Just keep in mind that when it does sell those 50 shares, the other order cancels because this is an OCO. And I use these a lot. These are really nice. What else is being asked? But as far as the end of the day thing, what I do end of day is I'll scan through a number of charts, typically my longer term holdings, and I'll look to see whether I should add to those. I mean, all last year was the year of buy the dips, right? And let's get back to a daily chart, and let's look at something where we could buy the dips. And the Qs and the SPY chart, each of them, when it came down and into these bottoms, in some cases, you get opportunities. You just have to kind of track with it and just keep building those positions. And you can either do it with the SPY and the Qs, or you can do it with SSO and QLD. And SPY chart actually was a better chart for doing that last year. If you I'm sure if you've done any trading or investing, you've probably heard it all year long. It's, the buy the dip crowd has stepped in again. I wasn't the crowd. I was just, one little guy. Based off yesterday's action, Greg, based off yesterday's action, could we see this shift coming? No, I don't think we did. In fact, at the end of the day yesterday, I thought we had a really nice close, a strong close with new highs on the S&P and the Dow, right? It wasn't new highs, but it was a new high close. So if we look at, see right now, we've made a new high today. Let's just zoom in here a little bit on the spiders. So yesterday, this close yesterday was at 477.71. Well, we had made new highs before, but we hadn't closed that high. So yesterday was the new high on the spiders and also on the Dow. So this is the diamond. So there's a new high, and we closed at the top of the range on a pickup in volume. No, absolutely not. Now, did it cross my mind that a lot of the times that what's happening right now is it's just us retail traders and the pros are coming back after the holidays? You bet. That crossed my mind. But I didn't know what they were going to do. So, no, I would say based on yesterday's action, no, not really. We saw, it's kind of like this. Show me a chart and give me reasons why to buy this product. Okay. And then somebody says, well, show me this chart and give me reasons not to buy this product. Well, I can do that too. But, sometimes you just have to, look it over. I want TNX. Look it over and just say, well, what is my overall thought on my what I want to do? I mean, overall the market goes up, right? So we look for opportunities to buy. Now, did the TNX yesterday with the rising rates give me a little bit of concern? Sure, but it didn't cause me to start looking at where I can short the spiders or where I could get to short the NAS. What it made me do is look at financials, because I know that when interest rates are up, financials do well. So there's always some opportunity out there. But yeah, finding shifts and catching them, boy, that is huge. That's one of the reasons why Pat does that ETF video on the weekends. if you don't tune into that, grab that. It comes out about 1 o'clock Central Time, and it's posted to YouTube. So if you go to our channel, it's Our Mission Winners on YouTube, and subscribe to the channel, you get a notification. We do send an email out later in the day, but if you you subscribe and hit that little bell, it will it'll notify you.
Well, Owen, isn't this a lot of just standard risk management practices? What you're talking about here?
Absolutely,
You know,
that's what we
it's
do. I
you
mean, we're
know it.
risk.
You know, we think that a rally may be starting off, but it's not. We've not seen super strong evidence of that. So we still keep the risk mitigation process going. And yesterday we just didn't go crazy buying things.
Right. That's what we are. I mean, primarily we are risk managers. That's what we do. That's always got to be job one. Capital protection, capital preservation is the primary thing that we should do. Ken, you're
And
definitely
I did.
interested in learning.
Owen, I'm going to cut you for a second here and just say there has been several folks that have seen that video that you made and have asked, and I'm not sure if you want to go into it here, but what specifically are you looking for in a stock to make that decision of putting the buy stop in and doing the follow on? That I know that that's come up several times. I was going to ask if you could do a video on that at some point, but maybe you care to talk about it here, or just go on to the
Yeah,
user
I mean,
questions. I'm not sure.
absolutely. What I do is I just go through the key list, and you know what? Let me just grab the key list real quick because it won't take me but a second just to populate it in here. And, this being my paper trade account, I don't have it. Zero 0104. So what I would do is I would just go through the stocks. I just load them up, and then I just thumb through them, and I decide what I like, and easy to look at it today and say, "Ew, that looks terrible." Okay, but yesterday there would have been a little bit of a different look on it. We wouldn't have that great big huge giant red bar off there to the right. QCOM, there would be one. That'd be good. Now I didn't have a buy stop on this, but that would be one that I like, certainly, with those tops coming across those tops. And let's just drill down to a 15-minute chart here and take a look at the volume yesterday and see what it did. So here's the first bar of the day, took off. The next bar came all the way back down, and I mean it was bad. It was ugly. If you remember, that's what happened yesterday. It's like the air let out of the market, and all of a sudden everything was coming down, and then just decided that it was going to pick right back up and take off again. But this would be one that I would like. It's just all the kinds of it really comes down to the kind of chart patterns that you like to trade. And if you haven't gotten that down yet, well, fire up your paper trade account and try to find bases that do this. Okay, this is a little whippy. It's more whippy than I like, but that's what the market's giving us right now. I mean, we are truly in full swing trade mode. We're not looking. I mean, nothing I get in right now am I looking to hold long term. I just don't feel the market is ready for that. We're still waiting for that, that trend, that breakout that's going to continue, continuation. And but this is what I do. I just scan through these and I just look for charts that have nice bases, and I can put a buy stop on them, possibly a buy stop with an OCO, and I just let them go. Okay? The next day I'll check them. When they fire, I'll check them, and I'll decide whether I want to stay in the trade, whether I want to cut the trade down by some percentage. Maybe I want to cut a third or cut a half if I'm not seeing the volume come in, or if I want to exit the trade completely. Yeah, Ken, you're interested in learning how to trade options. I mean, I can help you a little bit. I'm not real good at teaching just basic options. So there's a lot of information on the internet, I believe, that can kind of teach you what a call and a put is. Those kinds of things that are. But if you follow my videos and just do the paper trades on them, I believe that you'll kind of get onto it. I mean, I do very simple short verticals. It's um, for the most part. I mean, I'll do other stuff, but short verticals are a great way to get a position on the market, limited risk, directional trades, and then just set up your OCO orders to either buy those verticals back at something less than what you paid, a nickel or a dime or whatever, or you're exiting those verticals for something that is greater. So let's just set one up here real quick. Okay. Um, one of the things I'll do on the spiders, for instance, is when it comes down and touches the 50, I'm a seller of short put verticals. Now, a short put vertical is a bullish trade, right? Do we understand? Does everybody kind of know that? So, in other words, if I go in here let's say we're coming down here, I guarantee you on this day, I was selling short verticals on the spiders. When we sold off here and then sold off here and we came down and we pierced through the 50, because what do you typically know that's going to happen with the overall market? This doesn't apply to a stock, but this does apply to the overall market. What typically happens? Well, the next day we bounce. That's generally what we do. So I'll go out, say 20, 30 days, and I will sell. In this case, I would have sold something just slightly out of the 448 or the 449, 447. Let's just look with that. Oops, stuff popping up on my screen from Stream Deck. So let's look at it and see here. If I go out, 17 days is probably okay. Let's go out 17 days and let's look at these. Let's look at the Jan 21s. Now, this isn't going to be apples to apples because what I'm referencing is something that happened back here in early December. But if you're selling one strike out of the money, you're over here on the put side, right? The puts are on the right and the calls are on the left. So the shaded area is going to be the split, okay? Where you're unshaded and shaded is right there. You're at the money, okay? So right now it's trading somewhere between 177 and 178. So I would go one strike out of the money, and I would sell the 477 and buy the 476. I need to get rid of some of this stuff. Okay. And right now it's a 35 cent credit. I like to get about 40 cents for these. I wouldn't route this to 35. I like to get 40, and on a two-way, I like to get 80. And then once they're filled, I'll put in an OCO order to buy those back on a GTC order. I'll buy those back at a nickel, or I will put an alert on them, or I'll buy them back if the spread gets too close to the total width. And lots of times I'll look at them if it starts to get close to that total value, which is $1. That's all that spread can ever be worth is $1. And I will roll it. I'll look to roll it into the next, maybe the next month. Okay. I generally won't roll here because a lot of times those strikes just either they're not available or they get a little strange. So I just like to go out to the next month. I'll go front month on the first trade and then next month on the next one. A lot of terminology there is, I know, and as I talk more, I realize how much terminology is involved in options, and I recognize what that learning curve is. First thing is terminology. So shoot me an email and let me know where you're at, what you want to learn, and I will do my best to help. Lawrence wants to know any advice if trading an account under the PDR rules. Yeah, it makes it tougher the way we trade, and the way the market's moving right now. I mean, what you need to do is put on a trade or maybe two, and then you just have to exit it off, sell it off in pieces. And if you hit the limit, you hit the limit. I mean, they're only going to let you sell, right? But they'll just lock your account down and won't let you buy anymore until some day. I forget how many days it is, 5 days or something, and you'll get a notification, a Reg 10T or something that will alert you that you've violated that big rule. So it's a challenge, no question about it. But yeah, you got to start somewhere. There's no magic to it as far as I know or I can think of. Um, Devery, before meeting Pat, did you consider other styles like dividend style investing, rich dad, poor dad? Interestingly enough, back in the 90s, um, there was there were some books that Dad got, and like I say, Dad retired at the age of 50, and he would have been so he retired in 1990, and in the 1990s, he made a whole heap pile gob of money. Because that's what he did. He just studied the market, and it was a beautiful time. It was just, just it couldn't have been timed better for him to do it. But I remember him picking up books. I don't remember Rich Dad Poor Dad. Him picking that up. I don't know when that came out. I know it's a book. I just don't know if Dad bought that back then. But he followed Bob Brinker and got the Market Timer newsletter. And I'm not saying go out and buy the Market Timer newsletter. I'm just saying there's guys out there that he tracked with that that caught my interest, and it was through the reading of Bob Brinker's information in the 90s that led me to want to exit out of the market in the before the bubble burst in 2000. So yeah, there's other strategies out there. I mean, I guess I can say I don't manage, I manage 10 accounts. And when mom gets this other account squared away, I'll be managing 11 accounts. And so you can just imagine I can't actively trade those accounts. So I have to have other strategies involved. And I do share that information. I've got several guys that are members, and I do share that information. I use Vanguard ETFs, Vanguard funds, and I dollar cost average into the markets. I buy the dips, and one of the funds actually is a dividend yield fund. It's a high dividend growth yield fund. What is it called? Is it VOT? Is that the one? Sometimes I wish you guys could talk. We could just have a conversation. Dividend growth. Yeah, this is it. Okay. So this is one that I've built positions in, and I look to add to it when it comes down. I don't have a strong feel for it, but it's a way out there, investment. It's something that, like for instance, I have money in my IRAs in this fund and others. But yeah, I'm happy to share. I'm happy to share that stuff. The ETF video is a public video. Yes, it is, Greg. It is. Every Sunday comes out at about 1 o'clock Central Time. Um, Julio, do you and Pat keep track of your trading performance? We really don't. Do you take into consideration stats like average gain, average loss, batting average? We don't anymore. But that's not to say that you shouldn't and you can't. And how do I frame this up? I don't, I know, I'll do it this way. I know what I like to trade. I know what works. I have a good feel for what works. And if I take a trade and it breaks down and fails, like here's one. I mean, of course, everything's kind of goofing off today, but I am not making good money on Tesla today. But that breakout yesterday, that gap up and breakout, I mean, that was good, and I bought a little bit. I don't own it all anymore, but just because that failed doesn't mean I'm going to change my trading strategy. Just because that failed doesn't mean I'm going to look at this and say, "Oh no, I'm never going to buy another gap up again." Because I know that for the most part, they work. So it's for those reasons that I don't have anything that's really written down that beyond sometimes I'll print out a chart and I'll write down some information on a chart just on the printed copy, and I might thumb through that from time to time, but I have no real mechanism to track it. Now, having said all that, we have a pretty cool thing coming out in later this month. Excuse me, just one second. Good morning, Patrick. How's things going? Doing well. Hey, I
Hey, Owen,
am
you're
doing a
on
Latin event,
speaker. Owen, you
and
might want to mute yourself.
that's all right. That's all right. Yep, I'll give you a call back here shortly. Thank you. Pat says hi. All right. So what we have coming out later this month, we hope. Rich, are we still on track to get this out later this month? The new trade alerts. Yeah. So we've got a new trade alert system that we've got a trade alert system we're using now, and Rich has over the last 6 months rebuilt it. It's really slick and snazzy, and it was really designed for Pat. It's a better interface for him to post trades. Well, we were talking yesterday, and I was actually talking to a VIP. Levin had emailed in, and he had asked me about tracking some stuff on spreadsheets, and I said, "Josh, we just don't." But I got to thinking and talking to Rich yesterday. We think we can turn the trade alert system into a management system with a member-facing page. So that's just kind of a fancy way of saying we've got something coming down in the next coming weeks or month and a half, and we're going to roll it out. So we'll make it available for you guys to track. You'll be able to see your gains, losses. It's not going to do batting averages, but it's going to keep track of your trades, your positions. So if you're gonna pyramid or add in, it'll start off. You can put in that you're going to start off with 20% and then a value, and then you can add. So you're going to add 5% or 20% to that, or whatever you're going to do. It'll calculate all that and give you a total position size and what your cost is and what your gain is, and we think it's going to be pretty cool. So we're excited to be able to offer that. Um, let's see, John. Um, it would be super helpful and much appreciated if you could chop this video up and save it under options tutorial for later. This video that I'm doing right here today, am I not just blathering off on all kinds of stuff? I don't know. I guess I can make it available. Can we make this available? Are we recording this? Oh man, I don't know. Now I'm under a lot of pressure.
Well, Owen, I think if you took that video you made earlier and maybe did a follow-on to it, that would answer a lot of what you've talked about here. And I think that there's another video that you have on options that more or less went through what you just talked about. So you probably have at least 4/5 of it done if you don't want to use this.
I have no problem making more videos. I mean, none at all. I should tell you that, a lot of my videos just don't go out to the public. I don't make them available to everybody. People email in and they'll say, "Hey, what is your position on this? What do you think about that?" And I'll make a one-off video, and I'll email them the link, and they're the only ones that ever see it. And I can't even imagine how many. I was going to say dozens, but I'll bet it's probably a couple hundred of them that several hundred maybe. I don't know. But I can start doing more public stuff. I'm not opposed to making videos at all. You guys ask questions, I will answer them. So I think we're at the end of the list. Bottom fishing, John. I think that's the last question I see. Is there anything else? Everybody's just left their computer. They didn't want to just sign out and make me think that everybody left. So they just left it running and left their computer. Well, I hope it's been beneficial for everyone. If there's anything else, you can reach me, Owen at missionwinners.com, or if you have a question about something on the site or something that you can always email our help desk, and that goes to both myself and to Rich. You can email hello at missionwinners.com, and we're here to help. You bet. Thank you.